Joining me right now to talk more about that is the Wall Street Journal's technology and autos reporter, Tim Higgins is here. Tim, good to see you. Thank you so much for being here.
Absolutely.
What are you expecting from the earnings week?
Well, Netflix last week was a positive sign, and so we're going into, I think, one of the big things we're looking for is cloud growth at Amazon and Microsoft. That could be the bright part of the week. Then there's concerns about, has data privacy affected things with Twitter? Did Google, is it starting to see some effects to its advertising business, just kind of the pushback on concerns about privacy?
Yeah, I think you make a really important point earlier when we were talking during the commercial break. You said, look, the cloud business is going to be in focus, but there are so many companies that haven't made that transition to the cloud. Does that mean that there's a really big runway in terms of opportunity for growth in the cloud?
Yeah, absolutely. Look at Microsoft earnings for the last few quarters, and it's just been this kind of continued growth story in the cloud space there. They've been doing very well. You look at Amazon, we know them as the retail company, but they're also expanding in cloud. These are some areas for real growth, especially as we look at more of a digitalized life. You look at automakers moving into the digitalization of their cars and self-driving. They all need cloud.
Now, you mentioned Tesla is going to be reporting on Wednesday. That was a surprise, right? We weren't expecting them for another week.
No, yeah, right, absolutely. Last night, the announcement came out. They're doing earnings on Wednesday. This is going to be closely watched because, remember, Elon Musk has promised a profit this quarter, and a lot of people don't think he can get it there. The question is going to be, did he generate cash? He's low on cash. He needs cash to keep the business going forward. He could go to the markets and borrow more money or issue new stock, but he doesn't want to do that. He says he doesn't need to, that the cars that he produced in the third quarter can generate the business to go forward.
Now, in terms of Microsoft and Amazon, one of the, criticisms of some of these companies is that the valuations have gone out of control, even with the sell-off that we've seen. Assess for us earnings potential versus valuations.
Well, you're getting this issue with as interest rates rise, maybe the investors are saying, hey, we should take it out of these fast-growing stocks, that they're too big, that debt's maybe a better place to put it there, right? How high can these companies go? I think the counter to that would be that some investors feel like Microsoft and Amazon have a huge runway. You look at some of the troubles in China with the economy there and some of the rumblings there, and Amazon looks a lot stronger compared to Alibaba.
Yeah. So, well, that's an important point because Alibaba is a Chinese company. You're saying maybe the growth coming down in China also means lower growth for Alibaba.
Right. So Amazon just looks a lot stronger compared to them.
Yeah. And Twitter is another one that you're looking at.
Yeah. This should be a real positive story. It's been multiple quarters of profitability. They've said they can do an entire year of that, which would be huge for them. But last quarter, concerns about user growth in the U.S. and just pushback on fake accounts and, the whole kind of concerns about social media and hate speech.
Now, let me turn to trade because the Journal is reporting that U.S. steel producers are prevailing in their push to get half of the requested tariff lines removed from the latest round of levies. But Ford Motor says trade is putting a dent in the auto industry. The company says that the duties have made U.S. steel the costliest in the world, citing $1 billion in lost profits as a result of these tariffs on steel. Ford is set to report its third quarter earnings tomorrow. What are you going to be looking for there? And your reaction to this move in steel prices?
It's just a really huge uncertainty for the automotive industry, one that's already struggling with having to put a lot of money into new technology and issues with fuel efficiency emissions issues in Europe. So Ford here is really troubled in this area, saying, look, listen, U.S. steel is $260 more than China steel.
All right, we will leave it there. Tim, it's great to have you on the program.
Good to see you.
Thank you so much. Tim Higgins from the Wall Street Journal joining us there.